All right, if you care about markets, if you trade, if you're trying to protect your purchasing power, you need to hear this. Something just shifted. And I'm not talking about noise. I'm talking about a structural move that happened in the last stretch of trading where silver didn't act like a speculative asset. It acted like a pressure valve. And the trigger isn't inflation headlines. It's not Reddit hype. It's a policy shock that just landed. A 25% tariff announcement tied to Donald Trump in South Korea. That's already rattling supply chains. Now, I know what you're thinking. Another tariff story? But stay with me, because I'm going to show you why this matters right now. How silver is responding in real time, and how you can spot this exact pattern the next time it forms before the crowd even notices. Before I explain what caused this move, let me slow you down for a second and teach you something most people never really internalize. Markets don't react to headlines, they react to stress. Think of the global trade system like a tightly wound machine. As long as all the parts are moving smoothly, nobody notices it's even there. But the moment friction shows up, even in just one gear, that vibration spreads everywhere. And tariffs? Tariffs are friction. They raise costs. They delay production. They inject uncertainty into contracts that were priced for cooperation, not confrontation. And when uncertainty spikes like this, capital doesn't ask questions. It doesn't wait for clarity. It looks for shelter. That's where silver quietly steps in. Not as a shiny object, not as some speculative play, but as infrastructure, as a dual-function asset that straddles the line between industry and money. So what does that tell us? It tells us that when trade stress and monetary stress show up at the same time, silver doesn't need a narrative to move. It has a function. Now here's what's actually happening, and this is where it gets interesting. When a 25% tariff hits a major manufacturing partner like South Korea, the first order effect is obvious. Costs go up. Autos, pharmaceuticals, electronics, industrial components, all of it gets more expensive to make or move. That's the primary driver. Companies that were operating on thin margins suddenly have to reprice everything. Supply chains that were optimized for efficiency now have to build in buffers, and that's just the surface level. But the secondary effect, that's where silver wakes up. Those higher costs ripple into margins, into forecasts, into currency expectations. Companies start hedging. Funds rebalance portfolios. Confidence starts to wobble. And silver sits right at the intersection of all of it because it's both an industrial input and a monetary asset. It's used in solar panels, in electronics, in medical devices. But it's also held as a store of value when trust in the system starts cracking. So when production stress and monetary stress show up together, silver doesn't need someone to sell the story. It just responds. Let me break down the sequence for you. Tariff announcement hits. Supply chains immediately reprice risk. Industrial demand expectations shift because manufacturers are now looking at higher input costs and delayed deliveries. At the same time, investors start questioning the stability of the trade framework itself. Not growth next quarter, not earnings, but the rules of the game. That's the convergence. Industrial demand meets safe haven demand in the same asset at the same time. And here's what's wild about this. Gold usually reacts to fear alone. It's pure monetary psychology. But silver reacts to fear plus usage. That dual sensitivity makes it volatile, sure. But it also makes it explosive when the macro setup is right. And now let me show you the part most people are missing. This isn't about one country or one tariff. It's about a shift from cooperative trade to leverage-based trade, from predictability to pressure. And that's the part that should make you pay attention. If this is making sense so far, drop a comment and let me know where you're watching from. I want to know who's seeing this pattern too. Now, this is the exact same playbook we've seen before. Go back to the early 1970s, when the Bretton Woods system cracked and trade and currency trust fractured. Silver didn't creep higher. It surged. It went from under $2 an ounce to nearly $50 in less than a decade. Now, I'm not saying we're looking at that same magnitude, but I am saying the mechanics were identical. Trade stress, currency stress, confidence erosion, and silver filling the gap. Look at the late 2000s when global supply chains froze during the financial crisis and monetary policy went experimental. Central banks started printing, governments started intervening, and silver lagged at first, but then it outran everything. It went from $9 to $49 in less than 3 years. Even during the 2018 to 2019 trade war period, when tariffs became negotiating weapons between the US and China, silver responded. Not immediately, but structurally. It bottomed in 2018, then doubled by 2020. Zoom out and you see the pattern. When trade systems shift from predictability to pressure, silver reprices. Not for excitement, not for hype, but for durability. The larger story here is confidence. When confidence in the system erodes, silver fills the gap. Now, let me be skeptical for a moment because I want you to hear independent thinking, not just hype. Could this be wrong? Absolutely. Silver is volatile, and it overshoots in both directions. Could this tariff be walked back or diluted in negotiations? Sure, it's happened before. Markets front-run headlines all the time and policy gets adjusted, and there's always someone yelling manipulation or conspiracy or saying this is all engineered. Could that be true? Maybe. But here's the thing. It doesn't actually matter whether Trump's playing chess or reacting emotionally, or if this is coordinated or chaotic. The mechanics are what matter. When tariffs get announced, costs reprice. When costs reprice, capital moves. You don't need certainty to observe mechanics. You don't need to predict $135 silver to recognize when fundamentals start aligning. Focus on what you can control. Watch inputs, not opinions. Watch policy, not personalities. There are probably 3 types of people watching this right now. Maybe you're the short-term trader, staring at charts, watching silver move, wondering if this already happened without you. If that's you, your job isn't to chase. It's to wait for confirmation and respect volatility. Silver can swing 5% in a day. It can fake you out. The best entries come when the move pauses, consolidates, and gives you a clearer risk-reward setup. Don't let FOMO drive your decisions. Maybe you're the long-term holder, already positioned in silver or miners, feeling validated but unsure if this changes your timeline. For you, this is about understanding why you hold what you hold. If you bought silver as insurance, nothing's changed. If you bought it for industrial demand growth, this tariff story complicates that thesis but doesn't break it. And maybe you're the skeptic rolling your eyes thinking this sounds like another macro scare story, another reason to sell fear. That's fair. For you, the takeaway isn't to buy silver. It's to recognize how trade stress transmits into asset prices. Different assets, same mechanics. If you understand how policy shocks ripple through supply chains and into valuations, you can apply that framework to tech stocks, to commodities, to currencies. The universal principle here is this: when systems shift, prices adjust before narratives catch up. So here's what I want you to answer in the comments. Are you watching silver right now? Are you positioned? Are you skeptical? Let me know, because I want to understand where this community stands. Here's where I stand. I'm not pounding the table. I'm not dismissing this either. I'm watching signals. First, I'm watching whether tariffs expand or invite retaliation. If South Korea responds with their own tariffs, or if this spreads to other manufacturing partners, that escalates the stress. Second, I'm watching industrial demand data, especially in manufacturing and energy sectors. If demand holds up despite higher costs, that supports silver's industrial case. If demand softens, that's a headwind. Third, I'm monitoring currency stress, because that's where silver's monetary side lights up. If the dollar weakens, or if currency volatility spikes, silver benefits. If the dollar strengthens aggressively, that creates a counterforce. The way I see it, this move wasn't random or emotional. It was structural. The fundamentals didn't break. They clarified. Silver's industrial demand is real. Its monetary function is real. And when both get activated at the same time, the asset responds. Based on my analysis, this tariff shock was structural, not technical. It wasn't a squeeze. It wasn't a short-term sentiment pop. The fundamental picture around silver hasn't changed, but the urgency around it has. The dual demand case, industrial plus monetary, is still intact. The supply constraints are still real. And the policy environment is now adding pressure instead of removing it. If history rhymes and silver continues to respond to trade stress the way it has in previous cycles, the move that follows could be significant, not because of hype, but because the underlying mechanics are aligning. Now, I'm not a financial advisor. This is not financial advice. Do your own research. Verify everything I've said here. But if you made it this far, you're thinking critically. You're not just consuming headlines. You're looking for patterns. That mentality will serve you well. If this analysis helped, share it with someone who's trying to make sense of what's happening right now. Subscribe if you want more breakdowns like this, and stay ahead of the noise. Stay sharp out there. Think critically, verify data, and make your own decisions.